few options for your YouTube intro, aiming for a friendly and engaging tone without being over the top. Option 1, concise and direct. Hey everyone, welcome back to Forex Scope. Today, we're diving deep into EURJPY, breaking down the 15-minute and 1-minute charts to uncover potential moves and future trends. If you're looking for clear, actionable Forex analysis, hit that subscribe button so you don't miss out. Let's get started. Option 2, slightly more enthusiastic. What's up, traders? It's your host from Forex Scope, and I'm excited to bring you another powerful analysis. Today's focus is on the EURJPY pair, and we're going to dissect it using the 15-minute and 1-minute timeframes to pinpoint those crucial buy-sell signals and forecast the price direction. Don't forget to subscribe for your regular dose of Forex insights. Ready to trade? Let's go! Option 3, focus on value. Welcome back to Forex Scope, your go-to channel for insightful Forex analysis. In this video, we're tackling EURJPY, meticulously examining the 15-minute and 1-minute charts to bring you clear trading signals and an outlook on its future price action. If you're serious about navigating the Forex market, make sure you're subscribed for regular updates. Let's get right into the charts. Option 4, short and sweet. Hello and welcome to Forex Scope. Today, we're analyzing EURJPY on the 15-minute and 1-minute charts, looking for those key signals and trends. If you enjoy our analysis, please consider subscribing. Let's jump in. This support zone is identified by a period of consolidation and multiple touches, indicating significant buying interest at these levels. Specifically, between the timestamps 176-228-9100 and 176-229-0000, the price traded within a tight range, with the high reaching 176.398 and the low touching 176.336. This price action suggests that sellers were unable to push the price lower and buyers stepped in, creating a floor. The previous candle, ending at 176-228-9100, also shows a significant downward move with a low of 176.336, which was then retested and held, reinforcing its significance as a support. The Bollinger Band middle at 176.44106 and 176.42398 during these periods indicates that the price was trading near the lower end of its recent range, with the lower band at 176.29144 and 176.32292 respectively, further highlighting the area around 176.336 to 176.348 as a potential bounce zone. The presence of a prior candle with a low at 176.336 and another subsequent candle that briefly tested this level and then reversed upwards strengthens the argument for this being a well-tested support area. The trading volume within this period, while not extreme, showed consistent activity as the price oscillated, implying active participation from both buyers and sellers, but with buyers ultimately defending this price range. This price action suggests a potential area where demand exceeds supply, leading to a reversal or at least a pause in the downward momentum. The consolidation around this price level prior to a potential move upwards is a common characteristic of strong support zones. This resistance zone is characterized by a series of price actions where the bulls attempted to push prices higher but were met with significant selling pressure, preventing further upward movement and leading to a potential reversal. From timestamp 176-228-8200 to 176-229-2700, we observe a notable price range where the high reached 176.442 and the low dipped to 176.342. Specifically, the candle at 176-228-8200 hit a high of 176.442, and subsequent candles in this period struggled to surpass this level decisively. The upper Bollinger Band was fluctuating around 176.3613, 176.36625, 176.37345, 176.3745, and 176.3754, indicating that the price was testing the upper limits of its recent volatility. The presence of multiple candles failing to break above 176.442, with significant upper wicks or reversals, suggests that sellers were actively defending this price territory. This indicates a level where selling interest overwhelms buying pressure, forming a ceiling. The Bollinger Band middle line also provides context, ranging from 176.45175 to 176.42225, showing the price was trading near the upper band during this resistance formation. The sustained interaction of price with this upper boundary over several candles implies that it is a significant psychological or supply-driven level that is difficult for buyers to overcome. The formation of these price points, particularly the repeated testing of the 176.442 high without sustained follow-through, signifies a strong supply zone where profit-taking or short-selling is likely to occur, capping further upward advances and leading to potential price retracements. The support zone is identified by a clear price action pattern where the price repeatedly tested the area around 176.377 and 176.358. Specifically, we observe multiple candles exhibiting touchbacks to this price range. For instance, the candle closing at 176.244.9180 with a low of 176.463 and the subsequent candle closing at 176.244.9300 with a low of 176.373 show a clear downward movement that found buying pressure at these levels, preventing further decline. This price action indicates that buyers were active in this vicinity, forming a floor for the EURJPY. The presence of multiple candles interacting with this zone suggests accumulation or a pause in the bearish trend, reinforcing its significance as a support. The low price observed within this identified range, from 176.373 to 176.463 during the period from 176.244.9180 to 176.244.9300, further validates its strength as a significant level where price has shown resilience. This resistance zone is defined by price action that shows a clear ceiling around the 176.422 to 176.436 levels. Observing the data, we can see candles struggling to break above this area. For example, the candle closing at 176.244.9420 shows a high of 176.478, but immediately the price retreated, and the subsequent candle closing at 176.244.9540 had a high of 176.417, indicating selling pressure at these upper levels. The price action here demonstrates a barrier where sellers are stepping in to push the price lower, preventing upward momentum. The clear touchbacks and inability of price to sustain higher levels within the period from 176.244.9420 to 176.244.9540, with the highest price reaching 176.436 and the lowest within this interaction being 176.396, highlight this zone as a significant resistance. This implies a psychological level or an area of concentrated sell orders that are capping further price increases. The euro to Japanese yen pair is currently trading near a significant support level around 176.377, having bounced from a low of 176.336. Historical price action and the Fibonacci retracement levels, with the initial price point at 176.436 and the secondary at 176.336, suggest an upward bias. The current price is situated near the lower end of the Bollinger Bands, indicating potential for a reversion to the mean. The preceding 1-minute chart data shows a period of choppy price movement with several attempts to break lower that were met with buying interest, reinforcing the 176.358 to 176.377 area as a strong demand zone. Concurrently, the 15-minute chart shows resistance at 176.442, suggesting a battle between buyers and sellers. The next predicted price points are 176.415, representing an initial upward push towards the middle Bollinger Band, followed by a slight pullback to 176.398 as traders assess the strength of the move. A stronger upward surge is anticipated, targeting the resistance at 176.436, potentially driven by a break of the immediate selling pressure. A subsequent move to 176.412 reflects profit-taking or a temporary pause before a final push towards the upper Bollinger Band or a retest of the higher resistance levels, with a potential final move down to 176.373 if selling pressure intensifies, creating a zigzag pattern that reflects the inherent volatility and trading dynamics of the forex market. This analysis incorporates the confluence of technical indicators and price action to forecast potential price movements, providing valuable insights for traders to anticipate market behavior and make informed decisions.